And the important thing, guys, we got a triple whammy going here. We got generally positive comments from the Fed chairman, that Moderna vaccine news, and we've got a nice oil rally, too. In fact, we got a nice commodity rally. Metals are rallying, although gold noticeably down ever since that Moderna announcement. Let me just show you the S&P, because what's it worth to get a vaccine or hopes for a vaccine? About 35 points on the S&P. Look at that, 730. Moderna came out, and we just went straight up from there, sitting near the highs for the day. And important where we're at right now. Let me show you the S&P the last 3 months, because 2939 was the old recent high, the April 29th high. We've been struggling to get over that, haven't been able to, and you see we're essentially sitting right there. We can get over that. We'll go back to the highs that we had in March. We were descending in the early part of March, but nice to get over 2939 on a close if we can. This is all about reopening hopes again, and hopes for a vaccine. The travel and entertainment stocks, you want to watch them on days when there's optimism. They're all up, and you can see that. And look at these airlines, all up nicely, too. Remember, those airlines, an awful lot of cash burn going on with them. So any kind of hopes that things might be getting back to normal in even a modest way is going to help here. Sectors, banks have been enormous laggards. Boy, there's some catching up for the banks to do, but they're all rallying. That's nice to see today. Energy, also really good. Tech is lagging, and this is very interesting. If you look at the mega caps, remember, a lot behind this recent rally has been the mega cap names. Look at this. We're not really doing much with the mega caps today. That's interesting. That means some of these may be using as sources of funds to buy other things today. I think that's important. Let me just show you, by the way, the mega caps in the second quarter. You think they're not how important they are. I just want to show you. We're talking about 26% increases in Facebook. We're only halfway through the second quarter. And look at these numbers for these mega caps. So if these start flattening out and the market keeps moving up, boy, that would be really healthy rotation today. So again, we're halfway through the second quarter. What are we up? 10%, 11% for the S&P 500. Put up the major indices in the second quarter here. But again, as I keep arguing, this is largely a mega cap tech rally. Don't kid yourself. Look at growth there, up 15%. Value, which is mostly banks and a few energy stocks. Look at that. Way lag. That's a big dispersion between growth and value here. So just look where we are. And again, today is the halfway point for the second half. So everyone says this is the worst quarter. We'll see what's going on. But if you look at the sectors here, energy is rallying. Tech's been the big rally there. And you see banks down, transport's down, REITs down. This is before the opening today, but you get the point. This is an unusually wide dispersion in sectors after just 6 weeks of performance. So a lot of catching up to do right here. What's interesting is the trader sentiment. It's mostly bearish. People aren't terribly enthusiastic because they're concerned about the rollout and the reopening. So retail bearish sentiment's pretty high. That AAII number is 53% bearish. Yikes, that's pretty high. Equity ETF in mutual funds, it's been choppy, but there's been mostly outflows in the last couple of weeks and a lot of talk about high levels of cash on the sidelines. Is this bad news? Actually, as you know, folks, these are contrarian indicators. This is good news. So what we call the pain trade is higher. The trade that would cause the most distress to the most traders right now is higher, and that's certainly being exhibited today.